Is
but
it?
then she crops it.
And here we go. Oh,
I don't even
sorry.
Will she give you two of them? Like if you are sitting and
She gives you one, and she crops the face
Yeah.
on it, and then she does like from here up.
All right, we're gonna go ahead and get started. First of all, my name's Randy Lip, and I am with Certainty Home Loans. We are the alliance partner, your lending alliance partner here in the office. My office is right next to Brad's. Most of you have probably seen us as you've walked through the hallway and stole chocolate out of our jar. Yeah, well, if you haven't, then you should.
just filled it up.
I just refilled it. But this is Paul. He is on my team. Matt, you've probably met, is on my team. Debbie is in the office. She's on the team. Meredith is on the team, but she sits in the Buckhead office. So wanted to say welcome. Wanted to let you guys know that we're here for you. Our job is to make you guys look good and to help you be more successful. Okay? Just a little bit of background on myself. I've been in the business, like most of my life. I sat where you guys sit right now I was a real estate agent for about 12 years with Company X, Caldwell Banker actually. Wish I had the same opportunity that you do now, because what a phenomenal place you guys are at. I think, and like I said, I've been in this business a long time, this is like the best of the best. Brad's pretty awesome. Stacy's phenomenal. You've got a wonderful support staff. You've got a lot of synergy around this office, a lot of people that are certainly willing to help you at any given point in time. And you've just got some phenomenal lenders that are here to help you. So you're in a can't miss situation, okay? But I remember being where you are. How many of you guys are like brand new to the business, have not sold homes yet before? I mean, you're pretty new, okay. I mean, I remember once I got my real estate license, it was like, I got in the office and I was like, oh good, okay, I'm ready to make money. Ring phone, you know, and I'll answer it and I'll know what to do. That's not the way this business works, okay? So if you have these...
Damn it.
I know it! I know it! So
That's the most frustrating part so far.
if you have these visions of doing all this business without doing any of the work, it's not going to happen. Okay, this business is one of those rare businesses that you get out of it what you put into it. So I just don't want you to have any false visions that you're going to shoot right through the stars without putting the work in. But by the same token, if you put the work in, it is just a wonderful business to be in. I mean, you're in control of your own future. So, if you think you can or if you think you can't, you're right. Absolutely. Whichever way. So, our job today is just to kind of familiarize you with the lending part of it, because your clients are going to be asking you questions and you want to be knowledgeable. You want to be able to answer their questions somewhat, maybe not in the detail that they want, but that's why we're here. We want you to be able to answer their questions to a certain point and then hand them off to us so that we can take it from there. Okay? I'm not here to turn you guys into loan officers. I've got plenty of competition out there. I don't need any more. All right? So we're just going to kind of go through it. It's going to be interactive. Feel free, please, to ask questions. Stop me at any time, even in mid-sentence if you need to. And we'll kind of go from there. Okay? All right?
Yeah.
All right? Okay. And I do have pizzas coming in a little bit, so we'll feed you too. Sorry, Paul, we don't have your picture up here yet. That doesn't look like Paul. But that is Meredith. She's a sweetheart, and she works. We also do the Keller Williams in Buckhead, and she works out of that office primarily. Okay. So first of all, let's talk about what you're going to do, the process that you're going to do once you find somebody that says or you think might be in the housing market. What are you going to do? Okay, what's the next step? Well, from our perspective, you know, once you develop a little bit of a relationship with them, you need to get them pre-qualified right off the bat. Okay? Now, why do you need to get them pre-qualified right off the bat? Well, I can tell you my own personal story. When I started in your business, I was so thrilled to get somebody that says, yeah, I want to buy a home. I skipped that first step. Okay? And I put them in my car, and this was in Florida, and I put them in my car and I drove them around for 2 weeks. We found the perfect home that they wanted, only for me to find out they didn't qualify. Okay? So it was a very harsh lesson that I learned, and one that I hope you all don't have to learn. Please take my word for it. Don't assume anything. We all know what the definition of assume means. If they're, you know, oh, hey, they look like they're sharp dressed people, I know they've got good jobs, I know they should qualify. It doesn't work that way. Okay? You got to peel back the onion and really figure out what's going on with these people, and that's our job. So let's talk about that a little bit. Why do we want to qualify them quickly?
You know what they
We
can
want
afford.
Yeah.
Yeah. We want to know what they can do and what they can't do. Okay? But not only that is, I know that I had people that said, oh, you know, I'm fine. Don't worry about it. And I don't want my credit pulled right now. Okay? Or I've got a brother-in-law's sister's husband's niece that's in the business, and I'm fine. Don't buy into that. All right? What your comeback is, well, look, I want to be able to treat you pretty much like a cash buyer. I want to know that you're rock solid. So what I want you to do, what I need for you to do, is pre-qualify with my guys. Okay? Won't cost you anything. And then we'll know exactly what you can do and what you can't do. Okay? They're not going to keep hounding you and calling you every other day or whatever. But we need to know. We need to know. It's better to know than to guess. All right? Not only that is, I'm going to show you in just a moment, we've got some really cool systems that if there is a problem, it's better to know about it early so we can create a roadmap and a game plan to overcome that problem. Okay? All right. When we do a pre-qualification, somebody says, well, do you do a soft pull? Do you do a hard pull? What do you do? It's going to hurt my credit, blah, 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 blah. You know what? Reality is, yeah, it's a hard pull, and when we do a pre-qualification, it's going to reduce your score 2 to 3 points. Big deal. Okay? I'm going to show you that not only can we get you those 2 to 3 points back, we can get you a lot more than that. Okay? By the way, those 2 to 3 points are temporary. It's not like a permanent loss. You get them back after 90 days. All right?
Can you speak to if they want to get pre-qualified with 2 different lenders? How that works?
I can. If they feel the need that there is a need to get pre-qualified with 2 different lenders, or if they've already pre-qualified with somebody and now you're trying to talk them into pre-qualifying with us, the FACT Act says that there's no impact on their credit scores on another pull within 30 days.
From a mortgage lender.
Because we're listed real estate.
Okay.
Right.
So,
Yeah.
so in other words, they realize people need a shop for
Exactly.
loans.
Right. And the way that all came about was several years ago when you'd walk onto a car lot. I mean, you know, if you went to buy a car, I don't know, before you ever got to talk to the salesman, your credit had been pulled 10 times. I don't know how they do it, but, you know, it's just, and they would annihilate your credit score. So there's 5 different industries in the credit world. There's personal, which is like Credit Karma or, you know, one of those. There's employment, there's credit cards, there's buying cars, and there's mortgages. Guess which one is usually the strictest? Yes. Okay. It's the one that's going to be lending you the most money. So each one of those industries, though, has a different formula. for calculating your credit score. So if somebody says, oh, my Credit Karma is 679, I'm like, well, you know, in all likelihood, when I pull it, it's going to be a little bit lower. Okay? Just never ceases to amaze me, though. It never makes common sense, because I had that scenario last week and their score came back at a 7.7. They said their Credit Karma score was a 679. Don't know why. But that's why it's important for us to know. We can't go by your Credit Karma score. We've got to go by our score. It may be better, may be worse, but we've got to go by it. And that'll really help your clients. Okay? We can also help plan for the down payment, because cash sometimes is an issue. We're going to get into that. Underwriters and lenders as a whole, we don't like green cash. We don't like it ever since 9/11, because there's a thing called the Patriot Act that the government imposes upon lenders to make sure that we track where money comes from, to make sure that you're not a drug dealer, money launderer, or terrorist. So there are lots of people that we run into. Sometimes it's cultural, sometimes it's just personal preference, but they keep cash in a safe or in their mattress. And that money can't be used right away. Okay? We've got to be able to track it and source it and be able to prove to the government we know where this money came from. Okay?
And that it didn't come from the sale of drugs, money.
Yes. Okay? And the weird situation is we don't care where you spend your money, so you can go out and buy the nuclear weapons, you just can't sell them. All right? It's kind of bizarre. And I recorded that. I'll get a call from the FBI tomorrow. Okay. So anyhow, that's a couple of the reasons why it's so important to get your prospects pre-qualified, pre-approved. Speaking of that, what's the difference between pre-qualified, pre-approved?
I think pre-approval is a more detailed process when you get W-2s and taxes and
You are exactly correct.
bank statements.
You are exactly correct. Pre-qualified means that I've spoke to your client and I've looked at their credit, but I'm trusting that they've told me how much they make and how much they have. That's pre-qualified. Pre-approved is I've looked at their credit, I've looked at their income, I've looked at their assets, I've peeled that onion back as far as I can, they're approved. Which one would you rather have?
Pre-approval.
Pre-approval. If you're on the listing side and somebody's coming in, which one would you rather see? Right, pre-approval. So we always strive to get your clients pre-approved, okay? So, and sometimes we need your help. Give them a little bit of a nudge.
When you give the pre-approval, is there something called a confirmation letter that can go along with that? Am I saying, is that the right term?
There's a pre-approval letter.
I'm
Are
thinking.
you talking about
Commitment letter.
Maybe that's it. Okay.
The verbiage will say this file has been looked at by an underwriter, assets
A commitment letter.
and income have been,
But it's not a guarantee.
A commitment letter is.
Depends on
What shows up?
the lender too.
Okay.
Okay, and not all lenders are created equal. Just like not all real estate agents are created equal. And you'll find when you're going through the course of your career, when you get a Keller Williams agent on the other side of your transaction, your transaction is much more likely to go smoother than if it was someone from a different company. Okay, there's different levels of competency out there. I promise you that. And y'all are taking some steps to make sure that you are on the highest level, which you should be. We've taken those same steps. If you find that certainty is involved in the transaction, you'll find that it goes much smoother, much better than Fly-By-Night Mortgage Company, Inc. Okay? So, all right, let's go ahead and keep going through this. So, different loan programs. We've got, basically it's broken down conventional, government, and jumbo. Hey. Conventional, you've heard of Fannie Mae, Freddie Mac?
Yeah, I know. Tinkerbell arrived.
Okay, you just wanted to let us know you're here, right? Okay. So that's a conventional type loan. A government loan, FHA, VA, USDA. You guys heard of those loans?
Yes.
Okay. We'll talk about those more in detail. Jumbo, pretty much, it says private investor. It could be banks, it could be private investors, but it's a jumbo loan. Anybody know what that means?
Anything over 40, 483, 350?
Oh, you were so close!
44, 350.
There you go. Bingo. Bingo.
How did you know that?
Because I'm refinancing.
Okay.
484,350.
Right. So the general guidelines on a conventional loan, actually there's 100% financing now available. Okay? Things have loosened up quite a bit. It used to be you had to put 5% down, then it went to 3% down. Right now, with good credit, with compensating factors, you can actually get 100% financing going with a conventional loan.
101.
101 actually. Yeah. Okay. If you want more information, I'm not going to go into specifics on that loan. See Paul, he knows all about it. A VA loan. VA loan, I think, is one of the best loans out there. Number one, because we're helping those who served our country. Okay? And I don't want to get too, patriotic about this, but hey, look, I think they deserve, something for their sacrifice. So they get 100% financing. That's no money down. Most people think that stops at the conventional loan limit, which is the 484,350. It really doesn't. You can, if you've got a buyer that's VA qualified and they want to buy a $700,000 house, they can still get it. They're going to have to put a little bit of a down payment down, but not much. But they can still get a VA loan up in the $700,000 range.
Does their credit score have to be more extreme than conventional to do that?
No, it doesn't. Actually, the VA is more forgiving on credit score. Okay?
Also, if you're ever talking to a vet and they go, oh, I've lost my entitlement, just tell them to call us. I have done 3 loans on veterans that have lost their entitlement, and I did one for a lieutenant colonel, and he only had to put $50,000 down on a $620,000 house.
Wow.
He was ecstatic because he had a foreclosure in 98 on his house, and he thought he never qualified. He did.
Right. Now, so VA
That's a good
is
point, Paul. I'm glad you said that.
VA is borrower specific. Okay, borrower specific. In other words, your borrower has to be a veteran. All right. FHA is not borrower specific. It's property specific. Okay. In other words, it doesn't matter really who the borrower is. They could be a veteran or non-veteran. They can still get an FHA loan. Now, what's the big deal on an FHA loan? Big deal on an FHA loan is that it's much more forgiving credit-wise, and it's much more forgiving debt ratio-wise. Now, how many you guys have heard of FHA loans? Okay. One of the most common misconceptions about an FHA loan is it has to be a first-time home buyer. Not true. You could have owned 100 homes and still qualify for an FHA loan. One of the other misconceptions is you have to be poor. Or you have to be in the lower income tier.
That's what I've always heard.
Mm-hmm. Okay? Not true. You could make $1 million a year, still qualify for an FHA loan. All right? Another misconception is you can't have much money, like in the bank.
Okay.
Not true. You can have $1 million in the bank, still qualify for an FHA loan.
So give me an example of a situation where someone like that would have an FHA loan.
Okay.
I have some clients that are buying a $750,000 home, let's say.
They're not going to go FHA.
Right. No, they're not. Okay. That's what I was wondering.
Right. FHA, let me fast forward right here.
Okay.
FHA, yeah, that's right. FHA, $379,500 maximum loan limit.
Okay.
Okay. Now they could buy that $700,000
let's say.
home, but they're gonna have to put the cash
Right.
difference down to that.
Right, let's say they do.
Okay.
A $300,000 loan.
Okay.
What?
Why would somebody-
they need an FHA?
Okay, the reason why somebody would go FHA rather than conventional,
Yes.
and that's why we want to talk to your people as soon as possible, okay? So that we can help guide them, and you'll know, hey, these people have to go FHA or they can go either way. Credit issues
Okay.
is a big reason.
Okay.
If they've had a foreclosure
Sure.
or a bankruptcy, they might need to go FHA. If they have mediocre credit,
Okay.
a conventional loan is very, very sensitive
Right. Yeah.
to credit score. So if somebody, let's say, has a 660 credit score, they might get a 3.5% rate right now going FHA, and they might have to pay 4.5 or more if they're going conventional.
Okay.
So interest rate is going to determine that.
Wait a minute, you're saying interest rate is better on FHA?
Yes.
And credit score can be lower?
Yes.
And foreclosures can be less time?
Yes.
And short sales could be less time?
Yes.
Why the hell are people not going FHA? Yeah.
Okay. Let me tell you the pros and
Good
cons.
question.
I know, I mean,
No, that was a good tee up.
It- it's-
And now drop the bomb.
It's a-
now drop the bomb, 'cause I'm like, what?
It's a great question.
Uh-huh.
There's pros and cons. Okay? That's why FHA is really cool. Now, the negative to an FHA. Are you familiar with mortgage insurance?
Yes.
Okay? To most people, it's a nasty little word. Mortgage insurance on an FHA loan, you're going to pay twice. You're going to pay it up front. We're going to teach you that. Matt's going to teach you that in the contracts a little bit later. And you're going to pay it on a monthly basis. On a conventional loan, and again, I'm throwing a lot at you guys, and you may or may not need to know all this, but hopefully some of it you'll absorb. On a conventional loan, if you put 20% down, you don't have mortgage insurance. If you put less than 20% down, you have mortgage insurance.
On a conventional.
On a conventional loan, you can put 5% down, 10% down, 15% down. You're still going to pay mortgage insurance to some degree. On an FHA, I don't care if you put 50% down. You're still paying mortgage insurance.
back.
And you know when the mortgage insurance goes away?
When you get rid of the loan.
On a conventional loan, mortgage insurance goes away when you have 20% equity in your property. On an FHA loan, it never goes away.
Is that their
It
way
stays
of balancing
with your
their
loan.
risk? Because they're taking
Absolutely.
the loan with lower credit, so they're making money
Absolutely.
there. Okay.
Absolutely.
Well, I have
Got
an
it.
FHA, and she said that mine would go away in 2040.
Yeah, when you paid it off.
When you pay it off.
Yeah, okay. Now, there are a few exceptions to that. Okay, if you put a large amount down, it'll go away after, what, 15 years or something like that?
Yeah, because I just went through trying to refinance, and basically it's like I have to stick with it because it's the best.
Okay,
because
you're the
I
second
got-
person I've heard refinance. We do refinances also, okay?
I didn't know that. We thought you only did purchases.
No, we do, yeah, I know, thank you. And prior to, what was it, 2009, 2011, they changed the guidelines. Mortgage insurance used to go away on an FHA, but now it doesn't.
So what is a premium for a mortgage insurance? Give me an example of how, is that?
We'll go over that when we do the contracts.
Okay.
And you'll see exactly what that is when Matt does that. He's gonna do that a little bit later. Okay? All right, USDA. We talked about VA, we talked about FHA. The other type of government loan is USDA. Yes, it's the same people that stamp your beef at Kroger. It is geographic specific. In other words, it is a no money down loan. It is available to anybody, but it's only available in rural areas. Like up where I live in Cumming.
Okay, farming.
About 5 miles north of that, or about 3 miles north of Cumming.
Yeah, out past
Dawsonville.
Swanee. Yeah, it's in the rural areas. There's a map, USDA.gov. Google it, look it up. It'll tell you, type in an address, tell you if it's eligible or not. Okay?
And what's the, same thing, just, is it a, I mean,
It's goes with the conforming
okay.
loan limit,
Okay,
and it's no money down and very low mortgage insurance.
okay,
Very low. Okay, so it's a great deal
if you qualify for it.
if if the property qualifies for it.
Okay.
Okay? All right, let's talk about credit. Now, I could talk literally for 2 days about credit. But we talked, your question was, why would people use FHA? Here's the reason. Because FHA sometimes will go down to a 580. To be honest with you, I haven't done any down in that range, but I have done some around the 600, 605 range because there's a lot more restrictions down there. And let's face it, 10 years ago, was it 10 years already? We went through the crisis, the foreclosure, the economic downturn, recession, whatever you guys want to call it. We went through a hard time, all right? And one of the reasons was lending was too easy. We used to lend based on the pulse test. If you had a pulse, you got a loan, okay? So we don't do that anymore. So we've put in a lot of restrictions, especially on lower credit scores, because you know what? People have lower credit scores for a reason, guys. Let's face it, all right? They have lower credit scores because they had an issue. Now that issue could be fixed. Maybe it's not fixed. So we have to look a little deeper into it, all right?
Can I ask you a question? When you find people that have low credit score, a lot of times the credit report is incorrect, and they can prove it with documents to say, no, that was paid. Do you, the lender, able to help with that, or do they have to do that?
A lot of the times we can, okay? And I'm going to get to that more in just a minute if you will hold on to
I
that
will.
question, okay? Just
Okay.
hold on to it because I've got a couple of slides on it.
Okay.
Actually, they're coming up really quick. But as you can see, on an FHA, if you're 680 or more, you pretty much get the preferred rate. Whereas if you're conventional, it's 740. And with the conventional, like every 10 to 20 points you go down, you get hit harder and harder and harder on the rate, and not on an FHA.
And you get hit harder on the PMI.
The mortgage insurance, right? FHA is like standard mortgage insurance no matter what your rate or credit score is. Okay, questions? Good. We talked about credit issues, how FHA was a little more forgiving. Look at the foreclosure right here.
Wow.
3 years, 7 years. So you see why we might point somebody to FHA rather than going conventional. Okay? Short sale. You mentioned short sale, I heard you. 4 years, possibly 0 years on an FHA. It is possible. I did somebody that had just finished their short sale in May and we closed them in June. So it is possible. Now, you know what? We don't hear so much about short sales right now. I mean, you guys may never even see one out there. They're not as prevalent right now.
10 years ago they were.
Oh my God.
Oh, yeah.
Or even 5 years ago.
Oh, yeah. Yeah, and they're still out there now, too, but they're pretty rare. Okay? Let's talk about some credit mistakes. Again, we're going to talk a lot about credit because this is an important topic for you guys because you're going to run into people and they're going to say, oh, my credit sucks. Excuse me. You're going to say, you're going to have some information, say, well, let's talk about this, or hey, talk to my guys, let them take a look at it. I'm going to show you why. How many of you, if you have good credit,
What's good credit?
if you have good credit, you're going to get these offers that say, transfer all of your balances from all of your other cards onto this brand new card, close all the other cards out, and pay 0 interest for the next 2 years. Anybody seen one of those offers?
No.
Anybody taking them up on one of those offers? Okay? I'm not saying it's a bad offer. What I'm saying is if you take $1,000 each from 5 different credit cards, put it on a new card, and close out those other 5 cards, you've just cost yourself probably 70 or 80 points on your credit score. It sounded good, but it's going to annihilate your credit. The reason for that is when you close those accounts, they had a lot of good history that just disappeared. Okay? And opening up a new account drops your score. Temporarily, but drops your score. What they look for, when I say they, I mean the credit bureaus, is they look for that spread between your credit limit and what you owe. If you have a credit limit of $5,000 and you owe $4,999, you're getting negative points. It's hurting you. If you've got a $5,000 credit limit and you owe $500, you've got a huge spread and it's helping you. That's the basic premise for how the credit bureaus work. Okay? That's for revolving accounts like credit cards. Now, I run into people all the time that say, but I pay my American Express off every month. I use it because I love to rack up the points, the miles, the whatever, all benefits. So I pay all of my bills with one credit card, and then when I get the bill, I pay it off every month. It sounds good, doesn't it? Well, let's take John, for instance. He's got an American Express, and he's got $5,000 worth of bills every month, and he's got a $5,000 limit American Express. He racks that puppy up every month, pays it off, racks it up, pays it off. Anytime I look at his credit report, guess what I'm going to see?
High utilization.
I'm going to see that he owes $5,000.
Unless he had just paid it.
Doesn't matter if he just paid it. I'm
Oh,
going to
really?
explain to you why. Right here is worth the price of admission. Okay? Because the credit bureaus do not have a hot link to Amex. There's no instantaneous change. If he pays off his bill today, it's not going to miraculously show up on the credit bureau tomorrow. What the credit bureau knows is only what American Express sends him. So when American Express prints his bill on the 10th, he owes $5,000. They send it to John, they send it to the credit bureaus. When he pays it, they don't send anything. The credit bureau still thinks he owes $5,000. Okay? So when I pull his credit, he owes $5,000, so is he getting positive or negative points? He's getting a lot of negative points.
Why
Okay?
does the credit bureau find out that you paid it? I don't like
Doesn't
this.
work that way.
Is it just for
Hang on, hang on.
ahead of time
Bear,
online?
bear with me for just one moment, okay? So here's what I would tell John. Remember, I'm pre-qualifying John. He hasn't bought yet, so he's got a little bit of time. So I'm giving him some advice. Go on to your American Express account, find out when they print your statement every month. It's going to be the same day every month. It's either the 10th, 15th, 20th, whatever it is. It's going to be the same day every month. Let's say it's the 10th. So you go online the 7th and say, I see I owe $5,000, pay it. Now, when they print your statement on the 10th, what do you owe?
Zero.
So,
Ding, ding, ding.
what do they
Winner.
send? What do they send to the credit bureaus?
Zero.
Zero.
Okay.
Now, all through the month, you're racking it up, right? Because you're using it again. But I can pull your credit anytime, and what's it going to show?
Zero. Whatever they showed you in the past.
Whatever the statement shows
Okay.
is zero. It's whatever the statement shows. So remember that. There's no link. There's no hot link.
But basically, then we all have negative points right now.
Depends on how much you use your credit. I don't know.
I'm one of those point people. I just took
Me too.
the kids to Spain. It was all paid by points.
Right. And if you're not buying a home or not buying something, maybe it
It
doesn't
doesn't
matter. Okay? But I'm saying, I'm a lender. I'm advising you as a client, if you want to maximize your credit score, if you care about your credit score, then go online and, if you're going to pay it off anyhow, pay it off a week early. And rack up the points in your credit score. Good?
Great.
Good advice?
Great advice.
All right.
Question?
Give me 1 second. Give me 1 second. Because I'm going to give you an alternative. Positive points is the spread between your credit limit and what you owe. Let's say John can't pay it off that month.
Yeah, what happened?
Yeah, that's right.
Fair question.
Hello, American Express. Hello, American Express. My name's John Green. I'd like to increase my credit limit from 5,000 to 10,000, please. Oh, yes, sir. You've got an excellent history with us. We'll do that right away. Guess what?
No, he's
Positive.
Positive points. How much money did he take out of his pocket? Nothing. It's the spread between what you owe and your credit limit. Guys like that?
It was great to know.
Okay.
Yeah, the silence is deafening.
Yeah,
Oh,
it speaks
my
volumes. It speaks
It's
volumes.
good for all of us to know as individuals.
Right.
Yeah, right.
But, okay, let's tie this back. This is why it's so important for you all to get your prospects to us early in the game so we can identify these situations and we can help share our expertise. We know what we're doing. We just got to see what the credit looks like. Okay? Now, we've got a really cool tool.
Oh, I love this.
Every time we pull somebody's credit, it tells us how many potential points we can improve this person's credit score. It's an amazing tool. Now, it doesn't always look like this. This is a pretty good one. Okay? Usually it's like, 20 points here, 30 points there, 40, 50. I mean, I have seen one that was over 200 points just the other day. Matt pulled one. But these people's score right now is a 625, a 611, and a 614. But this says we can get them up to a 719 if they do a few simple things. Well, what are those things? Well, in this particular case, it's they can raise their score 107 points if they spend $3,326. Well, what do they have to spend that money on? Well, here's what they got to spend it on. They've got to pay down their Capital One account ending in this, pay down the balance to $216. They've got to pay whatever this is down to $291, and so forth and so on. Okay? It's not like it's a guess. These people know what the formulas are. Okay? This is pretty doggone exact.
And how long, if they did that, does it take for the credit report to catch up to all that?
All right, if we just let things sit, when is the credit bureau going to know what the balance is?
When they do the statement.
When they do their next statement.
On each of these accounts.
On each of these accounts. So if we just let it sit, if we're planning, or if your prospect is planning to buy in the next couple of months, okay, we would just say, hey, pay these down and let it cycle. Let's say your prospect is buying now. We do have what's called a rapid restore, and if they give us proof that they've paid these things down, we can get their score updated in about 5 to 6 days. And I'm sorry I didn't come back to your question.
I just wanted to know if that only applies for American Express, or is it all credit cards?
All credit cards. All credit cards. That's the way it goes. You ever heard of a secured card? If you want to try to build your credit, sometimes if we're talking to a prospect of yours that doesn't have much credit, they need more credit, we'll tell them to get a secured card if they have bad credit. The one criteria for getting a secured card, though, is you need to ask them, make sure they're going to report to all 3 bureaus. A lot of secured cards don't. So if you're shopping for a secured card, pay no attention to the annual fees, pay no attention to the interest rate. Those things don't matter, because the only reason you're getting that secured card is to help build your credit. Get one that reports to all 3 bureaus.
I've noticed a lot of the millennials have student loans.
Yes.
So do you help with that, or?
Sure. I mean,
Like,
what do you mean help
some
with that?
people
I'm not going to pay their
You're not
student
gonna
loans
pay their
for 'em.
student
How does that
loans?
affect?
No, I've raised my kids. I'm not paying any more student loans.
I spoke with with one girl and hers was like $100,000 and it was really impacting her credit. So, yeah, it's like, how do you?
Mhm. Well, I mean, there's not a whole lot we can do about
Okay.
that. But it's interesting that you brought that up
Mhm.
because that ties back in with your question about why would we go FHA or conventional. There's different guidelines on how we treat student loans.
Okay.
Okay. And they change all the time. These guidelines. It used to be FHA didn't even care about the student loans, so we say, oh, you got $100,000 in student loans, you need to go FHA. Now it's totally different. Now FHA is making us count 1% of the outstanding balance as a payment in their debt ratios.
Okay.
But if you're on an IBR or income-based repayment plan for student loans and you have a really low payment, conventional now says just count that low payment.
Okay.
So it goes back and forth. Again, another reason why we need to talk to them as quickly as possible. Any questions on this? Comments? You still awake?
Nah, it's good.
Good.
stuff.
There is some pizza in the back, so while I continue to talk, not everybody, but if like one or two of you want to get up at once and go back and get some pizza, please help yourself. All right, we're going to talk about income as it relates to lending. How many of you in here are self-employed? Every one of you. Okay? Promise you, if you're making money off real estate, you're self-employed. Guess what? I'm self-employed too. I get paid on a W-2 though. They take out taxes and everything from my check. Guess what they do to yours? They don't take out anything. Well, they might take out the Keller Williams fees, but they don't take out taxes and things because you get a 1099, right? Okay. But we're equal when it comes to a lender because we're all self-employed, whether we're a W-2 or 1099. Okay. So a lot of people want to know, a question that's commonly asked, if I'm self-employed, is it harder to get a loan?
Depends on how much money you can show in the
As long
bank.
as you have money.
Yeah, I was just about to say.
Okay, so I get it. That is what most people think. That's why I'm telling you, if you think somebody has got money, oh, I'm not worried about getting them pre-qualified. They've got money. They probably need to get pre-qualified more than anybody else. Because just because they have money doesn't mean they are paying taxes on that money. Okay? Doesn't mean they're showing that income on their tax return. All right? I talk to people all the time. Yeah, I made $200,000 last year. I get their tax return. They made $30,000. Okay? They grossed $200,000, but after they got done writing everything off, the net was $30,000. So guess what the underwriter's going to be looking at? $30,000, not $200,000. So is it harder for a self-employed person to get a loan? No. It just, we have to follow the guidelines. Okay? Now, again, as a self-employed person, sometimes we take a few liberties on our tax returns. Not saying that I've ever done that, okay? But especially if you have a client that's a OTR truck driver, holy crow. They make a fortune, but they write every penny of it off because they can, okay? So self-employed, not any more difficult to get a loan as long as you show an income. All right? And I will tell you that we do have some out-of-the-box loan programs for self-employed people, like a bank statement loan, where they don't even have to file a tax return. All we do is look at their bank statements. We add up all their deposits for the year, divide it by 12 to get a monthly income. That's what we use for their income. You know where this is good? I've done people that own nail salons that take in a lot of cash, or lawn maintenance type people that do a lot of cash, or hairdressers, or exotic dancers that make most of their money in cash, and we have loans for them. Your question?
Yes, does the money?
You an exotic dancer?
Were you on the vacation?
I gave up that.
Yeah, okay.
Does the money have to be deposited like in a certain, like every 2 weeks, or I'm sure they can't just be like $100,000 in the bank.
No, because there's like contractors. We're like real estate people.
Yeah.
You may go 2 months without making any money, and then you may have a month where you make $50,000 or $60,000. So no, it doesn't. We just add it up and divide by 12. Okay, but we do have a lot of outside the box type programs. But what can we use as income on a normal basis? Bonus and commission, part-time Social Security, disability, child support, alimony. As long as it's going to continue for at least 3 years, or at least in our mind, it's going to continue for at least 3 years, we can count it as income. Unemployment income, I had somebody literally last week want me to count their unemployment income as a viable source of income. And no, we're not going to do that. Also, if you're getting child support or alimony, it has to continue for 3 years.
What about inheritance?
That's a one-shot deal, that's not income.
Okay.
So
I mean, if the inheritance is like, if you inherit like an annuity,
Yeah, sure.
then it could be income as long as it's going to continue for
trust.
3 years. But if you get like a one-shot inheritance, that's not income.
But child support, you gotta make sure your kid is not 17,
Right.
because it's gonna stop at 18.
Right. Okay, any questions on that?
I got a comment. I had a lady come to me one time when I was talking to her. She goes, "Everybody's turned me down. I divorced my husband. I'm just trying to find a job, but nobody will talk to me." Well, we got some asset-based loans that she had tons of money that she could have, just tons. We used all her assets and came up with an income
Oh, wow.
It's called asset depletion.
depletion.
Yep. Yeah, we can, what is it, 3%? I think we can use 3% of their assets as income. As long as they're not
Are
using it.
these real estate also assets?
No,
No.
it was
Liquid.
401k stocks,
Gotta be
cash,
liquid.
Yeah.
IRAs, things like that.
That'd be nice though, wouldn't it?
That would be nice.
Yeah, I don't think we can do that. No, but if you've got, hopefully you're making income from the real estate.
Yeah.
Anyhow. All right, any questions on that?
So rental income would be on there.
Mhm. I have rental properties. I use that as income. Mhm. All right, we talked about this a few minutes ago. Cash is not an acceptable source. We don't like green cash, and I explained to you why. Because we think, or the underwriter thinks, you're a drug dealer, money launderer, or terrorist.
Track it.
What's that?
So you can't track it.
We can't source it. Right. Right. So what are some alternatives? If your borrower's short on cash, what are some alternatives? Well, one that they don't normally think of, especially when they're younger people, they have these 401ks that maybe have $50,000, $60,000, $70,000 in them, but they say, I'm not of age yet to take that money out. I'll get heavily penalized. What they don't realize is that most of the time, not 100%, but most of the time, they can borrow against their 401k at a very, very low interest rate, and there's absolutely no penalty.
And the interest rate they're paying
pay
back, they're
yourself
paying
back,
themselves
yeah.
back.
They're paying themselves back. So if they're paying that loan back, they're going to borrow money from the 401k. Let's say the loan payment to pay it back is $200 a month. We don't even have to count that $200 a month in their debt ratios.
And it never comes on the credit as a loan.
Because they're paying themselves back?
Because they're paying themselves.
Wow.
But
Yeah,
it's
we're gonna see it on the
still a
paycheck.
required payment.
Yeah.
We'll see it on their paycheck,
Right.
but it doesn't matter, we don't have to count.
We don't have to count it. Okay? Now, if your borrower's got $100,000 in a 401k from a previous employer, a rollover, they can't borrow that. You can only borrow it if you're still employed with that employer.
And
Because
not every single one allows this.
right, if you work for the Atlanta PD, they don't allow it.
If you work for Georgia Tech,
They don't
they
allow it.
don't allow it.
And you can only borrow a certain, like,
A percentage.
50% or 25.
And
or
usually
something.
it's like 75 or something.
I
It's
think
a
mine
high.
is 50.
Yeah, it'll change. It's different, whoever's managing your 401k.
Right.
But what I'm saying is, it's an opportunity. If somebody says, hey, I don't have enough cash for the down payment, hey, do you have a 401? Yeah, I got a 401k, but I don't want to borrow it because I'll get penalized. Or I don't want to touch it because I'll get penalized.
What about an IRA? If you have a health
Rules
directed- okay.
vary on that, and you have to check. They are not the same as a 401k.
Uh-huh.
Typically, you're not going to be borrowing against your IRA.
But you could use it to buy the asset.
Yes.
Okay.
Yeah. Again, another reason why we want
Okay.
to consult with your folks as soon as possible. Gift funds from a relative employer or nonprofit can be used. Okay. Here's what can't be used: a cash advance on a credit card. And I've had people try it because it's unsecured funds. You cannot use a cash advance on your credit card. Please don't let your prospects go out and rack up their credit cards before we get to them with unsecured debt. All right? Can't use it. Now, I have had people, we're still recording? All right, I'll talk softly. Literally, I've had people with $25,000 in safe in their basement. And they, well, I got plenty of money. I'm pre-qualifying. Yeah, I'm like, I only see 5,000 here. You're going to need 22. Where's the rest of this money coming from? Oh, I've got it. Well, where is it? Well, it's in a safe. I'm like, So, the best way to handle that is through a gift type situation. In other words, they get a gift from mom, dad, brother, sister, cousin, and then what they do after closing is up to them. Okay? Everybody on the same page? I see a puzzle.
Documentation though?
I see a puzzled look. It depends. FHA, conventional, two different guidelines. Okay? Right on cue. FHA says we're going to have to see the parent's bank statement.
Oh, jeez.
Conventional.
Never goes well. Right.
Conventional says all we need to see is the wire.
You said they're gonna have to see the parents, like if they're under.
So he needs to give it to his
age,
cousin so
right?
that his cousin can wire it to him.
If they're
Should I
under
say
the
that?
age.
He's saying if
If you get a gift from parents,
Here's what you need to know.
FHA is gonna wanna see the parents.
Work with somebody creative. Hello? We're here. Okay? Let's go with that. Let's go with that. Skip that. Renovation. Woo! One of my favorite topics, but I'm going to let Matt talk about it. And Paul. And then Matt's going to go over the contracts in the back too. So my part's done here. Thank you very much.
Thank you.
I enjoyed talking with all of you all and your questions. And I will turn this over. This is Matt. He has been on the team now for 3 or 4 years. Somehow he carries the same last name as I do.
And you look alike.
Yeah, we were wondering like why you're just saying that.
And you look
Yeah,
alike.
well, he's something about an apple in the tree. I don't know.
Is there a slide that has like?
No, there is no slide for those.
Cool.
But we're almost done with the slides here.
Okay.
There's a couple more slides that I haven't done.
We get a new clock?
Yeah,
Turn me on.
right before makeup.
All right. Well, like Rennie said, my name's Matt. We do carry the same last name. My bedtime stories at night were about credit reports. So, so yeah, I've been in the business for I think it's almost been 4 years now. So, nice to meet y'all. Welcome. I'm sure y'all got the kind of same speech. So, renovation loans, probably the most underutilized programs that we have. We're gonna take it. Start at the top level, and then we're going to kind of just dig a little bit deeper. They get a little more intense, just depending on what kind of renovation is needed. The basic one that we, like we said, is very underutilized is this conventional, 15% of, it's actually 15% of the purchase price. It is for cosmetics only. So this is great. I mean, what do most homes really need when you walk in?
Kitchen.
Bath, carpet,
stuff.
hardwoods, countertops, floorboards, stuff like that. So this is cosmetic only. We're not taking out any walls. We're not adding a carport or a roof. No structural stuff. So no siding, no roof, something like that. But for homes that have good bones, they just need they haven't been updated since World War II. It is a fantastic program. So 15% of purchase price. So if you're a $200,000 house, that's $30,000 in cosmetics that we can do. It is not two, and all these are going to follow the same basic principles. It is not 2 loans. It is 1 loan, 1 closing. We hold back that renovation money after closing. We can advance to contractors, actually at closing, to get started.
How much do you advance?
On this one, we advance 50%.
50?
50% of the bid.
Whoa, okay.
So if it's $30,000, then we'll do 15 to the contractor.
Okay, and that's
then
a
they can-
licensed general contractor?
Mhm.
Okay, and they're the ones who'd put in the bid for the scope of work
Exactly.
on closing?
Well-
Okay,
On the cosmetic, they just need to be a business,
okay.
right?
Oh, really?
We'd like them to be licensed, and insured. They do have to be insured.
Yeah. I mean,
You have to be insured. And we can do draws as necessary. I think on the basic one, we can do up to 3. But, they're usually smaller projects, so.
But
I
it's
said-
not for do-it-yourselfers.
Okay.
Right.
Right?
No do-it-yourself.
Yeah.
Bummer.
Slight conflict of interest. The biggest benefit of this, the cosmetic one, the top one, there's no hit on rate, and there's no additional fees.
So when they come out to inspect, they don't charge me $300 before the draw?
$150 for an
Okay.
for an inspection. Yeah, and $150 for a final.
Okay.
But there's no additional fees.
Mm-hmm.
So the way the process works for all of these, you go under contract. First thing you want to do is get a contractor out to do an actual bid, scope of work bid. The important thing is that bid really can't change you can't really change major things once we get it back, because what we're going to do is then take the bid and your sales contract and hand them to the appraiser, and he's going to appraise the project subject to completion. So he's looking for comparable sales. Let's take our $200,000 purchase and $30,000 reno. He's looking for comps at that 230 range, not the 200. So we can't change, 2 weeks later, you're like, oh, well, we're going to change the bid completely. Now we got to do a new appraisal. So can't change that too much. We don't care about colors or countertop. Just the basics though. We close on it like 1 loan. Down payment and everything is based on the total acquisition cost. So that's the basic one. Any questions on the cosmetic one? We call it an escrow holdback because we're holding back
I have
in escrow that
a
way.
statement. How many you're all loose, but some of the more experienced ones, there's a lot of clients out there that, they can't pinpoint the house that they want. And you get talking to them, they say, man, if that house in Dunwoody had the nicer kitchen, I would have been a major buyer on it. Boom, you go to that right there.
Say, if this house had your dream kitchen, would it be the one?
Yes,
Yes.
but I don't have, $30,000 to put new cabinets and sink,
Yeah.
and it includes appliances as well.
Yeah, you can do
Okay.
You
appliances.
mentioned that to them?
Okay.
It's,
Does it go above a certain LTV?
I can go up to a 97% LTV on that one.
Okay. And do you have to have it completed within a certain amount of time?
They say 30 to 60 days, but if it
Okay.
doesn't happen in
Okay.
30 to 60, I think I just get my hand slapped.
So there's no fee?
And this is not structural, this is not moving.
This is just cosmetics.
So if you want to pull your kitchen out and you have to take a wall down, then it wouldn't apply.
right.
That's cosmetic.
I would
If
say
it's a non-load bearing.
Yeah, obviously there's gonna be some things that are a little gray areas, Some things that are a little gray area, but we want to definitely no roofing, definitely no siding, HVAC, stuff like that.
Gotcha.
But between me and you, I have had one where they did that's what they did. They had to take out a wall to expand the kitchen.
Yeah, for sure.
And we kept it on the cosmetic one.
Got it, okay.
So, I'll say no, but we can make it happen. All right, the next one, conventional as well. This is where we're going a little bit deeper. We're doing cosmetic and structural. So this is where we're taking out walls, we're doing roofs, we're doing HVAC, stuff like that. This one, it's called a home style. It's a Fannie Mae, Freddie Mac product. And actually, we can do up to 75, that's wrong, we can do up to 75% of completed value in renovations. So if the after improved value is 200,000, oh God, you can do up to 150,000 in renovations.
So would that be like a flipper's loan?
Yeah. So I actually have one right now. It's a tear down. It's down near the new Braves Stadium, I think. But I mean, the roof is caved in, the walls are caved in. It's a family of rats living there right now. Under contract for $47,000, and she's gonna do like 150 grand.
So is that considered new construction? Just tearing it down?
When it's done, will you show us the before and after?
The before pictures are scary. I wouldn't even walk into that type of shop.
Well, seriously, I mean, to show in the next class.
Yes, I know.
And what did you say the LTV was on that?
For primary residence, it's the same, 97%.
Really?
What about investment property?
20%
Okay.
down.
Okay.
Because she's doing it as an investment property.
Yeah.
Is she
So-
doing 20% down on the completed value?
Yep.
Okay,
Same general principles still apply. Down payment, it's everything is based on that after improved value.
got it.
There is a hit on rate and there are some additional fees because these are generally larger scale projects. So they take a little bit longer. I think they have you have to a year
Okay.
to complete these.
And if you don't, then you pay like 9%. Okay. Oh.
So basically, she's just gonna pay you off once she sells the home.
Yeah, she's gonna keep it for 6 months. We don't have a prepayment penalty, but if our loans get paid off within 6 months, I've got to pay back my commission,
Really?
which I don't like doing.
Yeah. So,
Wow.
question for you, the cosmetic and structural, could that be primary home if someone did need
Yeah.
new siding, did need a new driveway that's caving in?
Can be
walls?
primary residence or both of those can be investor as well.
Okay. The cosmetic is not.
Your wheels.
I'm looking at the driveway.
I know, me too, I'm like,
So cosmetic 15% is not the driveway, is not the other.
No, nothing
Got it.
structural.
Got it.
Like I said, that cosmetic one is the most underutilized program because it's
I didn't
so
know
easy. It's so easy to add on.
That is a great selling point because especially in this area, well, a lot of Atlanta, you walk into some of the
In Dunwoody,
most
stuff's not
outdated
updated.
homes.
Yeah,
you're
and
like,
we're in Dunwoody, so
how
it's like.
can I get past this?
Yeah.
As a realtor, I would love a little more information saying, yeah, here's
Yeah,
this
we
paper.
have we have like a little 1-page
I've got one.
summary thing.
I think it's a great thing to put in packages.
Yeah.
And
Because
when
I know
You
the
don't mind my
market that I'm
picture,
working in.
and when you hold open houses.
I was just
for
gonna say,
agents,
you should open-
Because I know the market I'm working in,
Absolutely. I mean-
and that's 90% of their problem why they can't, a lot of time they can't see past.
Right.
people don't
Right.
have vision.
They
Okay.
can't, they don't have a vision, they cannot see past. And then I didn't know this existed, and they don't have the money.
So what I recommend doing too is if you have a house like that and you know like a good interior designer
Have them draw.
or something, have them sketch it out or do something in CAD that you could have at your open house that says like this is the kitchen now, but like I have a picture that says this is what it could look like.
How much do people charge for something like that? Do you know? Do
I think
you
it's
have
just
a ballpark?
I would say probably at least a couple $100.
Okay, it's not outrageous.
Not outrageous.
And I
All right.
can send PDFs of this, so can Matt.
Amina had her
This is
hand
really
up.
great to have in a
Okay.
filter folder.
Yeah, it is. I mean, to have no hit on rate is just because the other one. I mean, like the home style will carry probably about 0.5% higher interest rate if you're doing the structural stuff. But the cosmetic one is just so easy to add on.
Now,
Get the
let's
paint you
say,
want. Get the
let's
carpet
say
you
your
want.
client is pre-approved for 200. You know, most people, it's just human nature, you go looking at ones that are bumping your limit.
Right.
And they fall in love with one that's 200, but it needs the, you know, they still have to qualify. They're gonna have to qualify for whatever the finished
Yeah.
amount is, so that you may have to talk to them about, all right, let's look a little less, you know, look a little lower in price point.
We're not finding anything at 200. Well, let's look at 175 and see what we could throw 25,000 at, and then you.
That's it. See that, I mean, so you may have, it usually doesn't happen right off the bat. It's a process, but
The hard part is the vision, though,
Yeah.
of seeing what it would look like afterwards. Totally.
Yeah.
You bring the property brothers in, that would explain.
So how quickly do you close on these?
We close these in standard times. The only thing that would extend it is how quick you can get the bids back. If you can get us the bids back in your due diligence period, and we can order our appraisal like on a time frame that we normally would, then it's the same. We don't add any time for them. But if it takes 3 weeks to get a bid back, then
Yeah. See, the
Our
thing
hands are kinda tied.
I'm looking at is like hard money or this, and hard money loans close in 10 days. So if you're working it with an investor, you know, you just have to weigh that sometimes. But
yeah, and I mean, we can do, I don't know if Randy mentioned it, but we can underwrite people before going under contract, which is what I like to do, like if you, that scenario, so that we've got somebody signed, sealed, delivered, completely approved prior to going under contract. It's only subject to the collateral, which is the house.
Right, asset base.
Yeah.
Okay.
Gubby, so as far as I know, we are the only company that offers a VA renovation loan. I have not found another one out there. We structured this like directly with the VA, so we can do 25% of loan amount now for veterans.
Do you fund your own loans and that's why you can?
Yeah, we process, underwrite, and fund everything in-house.
Okay.
We are not a broker.
That's great. That's
Yeah.
a big difference, guys. I used to be in the mortgage business. It's a
We do
huge
everything,
difference.
in-house.
Because they can, when they've given you an answer, they're giving you a real answer.
Yeah, not let me check with whoever.
Cool.
Yeah, we fund in-house.
Right, okay.
And that is one of the reasons why we can do that. And the holdback and stuff is because we're holding back our own money.
Also here, I've noticed already, is they underwrite the whole loan. Where I came from, they see something, oh, you need to get this. Okay, I'll get it, we get it. And then they go back in, oh, wait a minute, we need this. And it's like, whoa, do it all, give me a list.
Yeah, don't piecemeal.
Don't piecemeal it.
Yeah.
Oh, I hate that. They don't do that now.
Our typical turn times for underwriting are 48 hours.
How long has your company been in business?
Since 2001. Headquartered out of Plano, Texas, and we were out from like Texas and do like kind of like a U shape up around like Texas and east up the East Coast. And actually, we have a renovation team that sits in Colorado. So for these larger scale projects, our renovation team is involved, and they're working directly with borrowers. They're working directly with contractors to arrange draws and get all the forms.
Yeah, you're not doing it. They are.
Yeah.
You all got enough to do.
Well, you wouldn't want us to screw it up.
okay, I'm a timekeeper because we.
Okay. I'll hustle, Russell. Yeah, the VA loan is fantastic. FHA to 203K follows the same. The only thing you can't do with FHA is obviously investment property because FHA has got to be owner occupied.
Yeah.
Jumbo. If anybody runs across a jumbo and renovation loan, let me know because I've never seen one. They don't exist.
They don't exist.
All right. Investment loan, conventional up to 85. Lord. Skip that. All right. Exhibits. Let's start with. Conventional. Everybody got that in front of them?
Well, one thing at the beginning.
No, you can ask me to do anything. I'll sit here and do jumping jacks.
Y'all, a good thing, this is a great thing. If you spread out Venture FHA and VA all in front of you, guess what? Page 1 is exactly the same on all three. So, it's when Matt's going over and he picked conventional, but it's gonna apply to all three on page 1. The differences happen in this page 2, right, Matt?
That's correct.
So just, that's kind of a shortcut, just so you don't.
Yeah, we'll just.
I
start with
remember
page-
I'd done all conventional, the first time I had to do FHA, I was freaking, but page 1's the same, so you're part of the way there.
Everybody got one?
Here.
All right, so I'm basically just gonna go through the blanks. Is that okay, Stacy?
Absolutely.
Okay. Convention, or I mean, so page 1, we usually do A, first mortgage. Loan amount, that is a percentage of purchase price. So if they're putting 5% down, then that is a 95% loan. Term, and I've seen agents write in the loan amount as a dollar amount, it is definitely a percentage. Because percentages really won't change, dollar amounts could if you guys are doing
Right, if the sales
an
price
amendment to
changes.
address concerns or sales price changes, etc. Term we do in years, typically 30 or 15. Interest rate at par, check with the loan officer, see what their going rate is right now. This is an important part because this is what your clients are pre-qualified for. So let's say that the interest rate right now is 3.75, but in this box you put 3.5. Then technically speaking, correct me if I'm wrong, but they could be turned down for the loan and then lose their earnest money.
Yeah, this can be a big.
I don't
point of
see it
argument.
happen, but like if they are right there bumping that ceiling and it's the interest rate that, you know, the interest rate goes up a little bit and payment goes up $20 a month and now they don't qualify, then it can go back to this.
Yeah.
So I always prefer, let's say, and this is just a placeholder, obviously, this is not what they're locked in at or anything. So my general rule of thumb is if we say it's 3.75 right now, put 4.
Exactly. This is, trust me on this, because I'm in fights all the time with agents, on co-op agents that have been trained. This document is saying to the seller, this is what I intend to get. It's not the final rate, it's not the final anything. This is the loan I've been pre-approved for and I intend to apply for. Things change, we know that, right? Rates change. So A, never leave it blank, never leave it blank. And B, as Matt said,
Throw some
you
cushion.
know, usually lenders will tell you, okay, the rate we're talking today is 3.75. Well, rates could go up a little bit, and don't scare your buyer. Your buyers always get scared when you go, wait a minute, they approved me for 3.75. Why are you putting 4? Well, it's just a fudge factor, you know, because rates change a little bit. And I have had buyers myself that were like, no, I don't want to say. They feel like they're committing to 4.0. So just go back to 3.75. It's not worth dying over. But at a minimum, you want to put what they've been pre-approved.
Yeah.
I got something over the weekend from Navy Federal. They didn't even mention a percentage. So now we got to call them back. And so it's gold. Certainty is gold. So you get everything you need.
I just like, I like to have a little wiggle room.
Always round it off
Just-
to the nearest whole number.
Like I said, it's just a placeholder.
Right. It says,
It literally
this
just
is what I'm
placeholder.
applying for.
Yeah.
You know.
Rate type, check with the loan officer, could be fixed. We have all 3 of those products right now. Source of loan terms is always institutional, unless you're doing like seller finance, which I don't like to have this anyways. Institutional. All right, down, approved mortgage lenders. Just go ahead and write in Certainty Home Loans. Basically, the reason for that box is they have to apply with that company. They don't have to use that company. But if their loan is not approved, they have to get a termination or a loan denial from that company in this box. Does that make sense? Does anybody know why that would be the case?
to give the other people you might head to a heads up?
So
It was contingent upon approval, you wanna be able to show you want approval.
yeah, so let's say in this box it says Certainty Home Loans, and you're the listing agent, you're the seller side, and you find out they don't the buyers don't qualify anymore, and you get a termination or a loan denial letter from Quicken Loans.
Escrow.
That won't work. It's got to be from that company. Correct?
Yes, and so we advise best practice is that you come up with 3 lenders that you're comfortable with, Certainty being one of them, and that.
You got 3. You got
and-
me, Randy, and Paul.
That's 3. Then you put the names of 3 lenders. So I ask my buyers, do you have somebody you're already working with? So I'll include their lender if they have one, Certainty, and somebody else, I have others, and to give options, 90+% of the time, there is no issue. It's just, whoever they pick. The other thing I like to advise best practice is don't just put Certainty Home Loans, put Certainty Home Loans, Matt Lip, and his mobile number. That telegraphs to the listing agent, the seller, we are so confident, my buyer is good to go. It helps the listing agent call, hey, how's Susie buyer? That's just a subtle thing, it's not a requirement, but if you go ahead and provide the lender's name,
We usually
just
call that
Navy
agent
Federal.
pro.
Yeah.
Yeah, I mean,
that
if
is
we're
subtle.
on the same page and you're putting an offer in, what I like to do is I'll do a offer specific pre-approval letter with the property address and exactly how much your client is offering. And then once you tell me, hey Matt, we've submitted an offer, I call the listing agent and say, look, I've been working with Susie Homemaker. I've seen her credit, I've checked her, I've already got her underwritten, she's as good as gold. And I will toot our own horn really quick.
No, go ahead.
Keller is obviously a name in Atlanta that carries a lot of weight, right?
Yes.
Did you know that, what is it, like 70% of transactions in Atlanta right now are Keller on each side?
Wow.
Something like that.
That's pretty
Yeah.
strong.
Right.
I look at it's around there. Certainty not only is part of this office, but 7 other Keller Williams offices in the Atlanta area as a preferred lender. So I have had the case where our name carries a little more weight than a Quicken or a BD&T or a Chase or something like that, and the listing agent recognizes that because they're another Keller agent in an office where we sit, and it can be a deciding factor sometimes.
Yeah.
How many loan agents do y'all have?
In Atlanta,
Yeah.
I want to say close to 30. We've got some people sit in Kennesaw. We've got offices. We're at the
Buckhead and.
Buckhead,
First Atlanta.
First Atlanta.
I don't know where in Rawls Creek.
Yeah, and then there's like Cityside. I don't know them all, but I know there's like 7 or 8. So that's tooting my own horn. All right,
Well, but
finance.
it's a strategy. You want your client to win, to get this property, and anything you can add to your arsenal that's gonna make your client's offer look more solid, is you're doing your fiduciary duty.
Also, some client, our rates vary everywhere. Sometimes we have the best rates, sometimes we don't. Some clients will tell you, hey, I'm not using Paul, their rates are a little high. Let us know. Quick text, and we'll go and I'll go to Randy, they'll go to Randy, and we'll work on the rate. So sometimes, and that pushes, if they take the rates higher, they're already calling other lenders. And I want to tell you, there's some other lenders out there, they're silver-tongued devils. I'll talk to them.
I just wanted won a refinance back from Regions because they couldn't close it in 2 months, and we had instantly verified her income. She works at the CDC, so no pay stubs, no bank statements, no W-2s. 80% LTV. I had an appraisal waiver, no appraisal, and she was bringing $0 to the closing table. Regions
Our
closed it
system
in 2
verified
months.
on my client the other day, her income, her W-2s, pay stubs, and her assets. So we're not asking for any of that stuff. It's all done through the cloud.
Finance contingency. This is where it's important to. So this is number of days that your client
Matt,
has.
you need to say it's item 5, because this is the
I'm
first
sorry.
time they've seen this document.
Item 5,
Thank
there
you.
is a blank there. For the number of days from binding agreement to determine if the buyer has ability to obtain the loan. So this is basically the number of days we have as a lender to get your client approved. These are important dates for us that we'll go through. These are on our calendars. We know when that contingency is up. So we have until that date to get your client approved. If we are not able to get an approval at that date, that's where we're basically skating on thin ice. And if we have to turn down a client, then, and it's past that contingency date, your client loses their earnest money. If it is before that date, they get their money back, their earnest money back.
So what's the typical date now?
I like to say that it varies. Some agents will just throw 21 days in there,
24.
21, 24. But like Stacey was saying, your goal is to make your client look as strong as possible. So, I mean, I've had scenarios where I put 0 in here.
And don't you think that stands out?
0. That
So,
means my client is
If
so
you can
good
put
as
in a number
gold,
less than 20,
it
you know,
looks
but
better.
you can't do that unless you talk to the lender. It's gotta be their call. They've gotta give you the number.
Before you go find the house.
Because like in
Not
the
necessarily,
scenario,
but not before you submit the offer.
I mean, really, this number for me is how strong of a buyer are they?
Right.
If they're sketchy, I'm gonna say 21. But if they're, I mean, if the only way that they'd get turned down for the loan is if they lost their job, then I'll put 0. Does that make sense?
So that's a real strategic advantage. Don't, don't fail to use that.
Yeah. All right, I'm skipping. I know this is the first time y'all are seeing this, but I know I'm short on
Well,
time.
they're going
So-
to take them home and read them.
So, but yeah, I mean, this is protecting your clients, our clients. And I mean, if you have listings, you need to know what all this stuff means. So read through it, and if you have questions about something that I'm not going over, circle it, highlight it, call me, text me, email it to me, and I'm happy to help. Okay? The next blank is number 11, appraisal contingency. Another date that we have circled and marked on our calendars, because that is the date that we have to, look at this. That is the date we have to have an appraisal back by. Because if we get back a low appraisal, and it's after that date, you have no room to negotiate. If we get an appraisal back low, and it's before that date is up, your client can walk away and get their earnest money back.
Or
Okay.
renegotiate.
Or renegotiate. But if it's after that date, kind of stuck. So how many days? Again, it can depend. Some people just throw in 21, okay? But I mentioned that we can get appraisal waivers sometimes, which means that we don't even have to do an appraisal.
Is that based on how much money they're putting down?
Typically 20% down.
That's all for appraisal waiver?
And the data.
I'm not saying that if they put 20% down, they're automatically going to get it.
Well, what
But-
determines that then?
Automated underwriting, DU.
And the data that's available for the house sales. It
Right.
pulls
So
it in and.
the property makes a difference.
Yeah.
Okay.
But it is possible. So I get an appraisal waiver, and you can put $0 days in that box. Or let's say you're doing a renovation
Sellers are
loan.
very excited about that. Very
Sure.
Yeah, because it's basically these are ways that your
They're saying,
buyer
I'm
can
not
back
gonna
out. Ways that your buyer can back out, and if there's less ways that a buyer can back out, that looks better and better and better for a seller. Right?
The buyer gets $400 back.
Right. They don't have to pay for an appraisal.
They don't have to pay for an appraisal. But let's say we're doing a renovation loan, and you know that contractors are stacked up and can't get somebody out for 10 days. Well, like I said, I can't order the appraisal until I get the contract, the bid back. So, I mean, it's all about communication. Okay.
I would have a contractor lined up before you.
Several. Yeah.
I have a good recommendation for one of you that's done 6 or 7 of these for me. Of the renovation loans. All right, next box is number 12, lender required repairs. So that is if there are any, when the appraiser goes out and notes that there are structural or safety issues that need to be corrected prior to closing, then this is where this box comes into play. 99 times out of 100, I see this box filled in with completed and paid for by seller. And I mean, the amount I typically see is $500 in that box. And full disclosure, on a conventional loan, we don't really see too many lender required repairs. Conventional appraisers are fairly liberal with what you can get away with as far as repairs go. Okay. Questions?
This gets real confusing.
It'll get confusing with the next one.
Right, but even just the concept, you know, you're filling this out at the time you're making an offer. So you haven't had an inspection, you have no idea what kind of repairs there might be. So you're going, what do I say? What do I say? Whatever you fill in here doesn't take away your buyer's right to have an inspection and ask for repairs. That's a whole separate thing. So I really think it's safe just to put seller 500, leave it at that. Sellers don't get upset about that. If you were to put 5,000, they might go, whoa, 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 I'm not, you know. So that's a very safe way to approach this. But just know, this doesn't take away your buyer's right to do your amendment to address concerns.
Yeah,
Because
exactly.
that's confusing.
Yeah. And I mean, you don't have to put $1, you can put $0 in there. if you
How
want.
often does the lender require repairs?
Well, you said on
Conventional?
like.
Very rare.
Yeah,
FHA and VA, they're just
yeah.
more, I don't know how to put it, a little bit stricter on appraisals when it comes to what needs to be repaired. Wood rot around a soffit or something.
Irrigation I had one time.
A good thing is like wood rot around a window or something. Conventional, all day long, approved, stamped, approved. VA and conventional, or VA and FHA, they're gonna want that fixed.
Because they're taking on more risk because of less of a down payment.
Honestly, I wouldn't say that. I know for VA, they just want to make sure that our veterans are staying in a structurally safe, sound home. Probably the same thing for FHA because that's got to be owner occupied. So they know whoever is on that loan is going to be living in that house. Whereas conventional, it might be investment property, it might be a second home. Like they're just not they're not looking at it as closely. Does that make sense?
Yeah.
That's my guess. It makes sense. It
The
sounds good
big,
to
the
me.
big thing I always tell all agents is they're looking for any hazardous or a safety issue.
Yep.
And loose wires or a plug that's not covered. And that's so easy to fix.
Yeah.
So,
If a 5-year-old can walk around and not get injured, then you're probably good, you know. All right, conventional, last page, signatures. So we're good on that one.
Yep.
FHA. First page is identical. Everyone's got the FHA one? Okay. Jumping down to, I guess number 11 is the first blank that I see. Oh, that is where you put in the purchase price.
Okay, I want to point out, if you wouldn't mind, go ahead and have your, all three open, conventional, FHA, and VA. On the conventional, we call it the appraisal contingency, and they're all three number 11. But for some reason, I don't know why, for FHA and VA, they call it the amendatory clause. And it's pretty much the same thing. It's whether you're gonna amend the sales price because the appraiser doesn't think it's worth, you know, what you're offering. But just to not get confused, it's number 11 in all three. appraisal contingency and conventional amendatory clause in the other two. And as Matt said in the FHA, you should fill in the purchase price, not the words purchase price,
I
but
have
the
seen
actual
people
numbers.
write purchase price.
Yeah, exactly.
It's got to be an actual number, and if that sales price changes, this has to be amended as well. Okay? You'll notice that there is no, what do they call it? Appraisal contingency. There's no number of days for FHA. FHA and VA have no appraisal contingency. It runs to the date of closing.
So wouldn't that make an FHA and VA loan then
Not
a little less
quite as attractive.
attractive than a conventional? Because a buyer can bail the day before closing,
If it appraises low.
so
There's another,
there's all that, yeah, it's check, weigh the pros and cons.
And I've ran into agents that are like, oh, it's a VA loan, I'm not gonna take that. I'm like, it's a someone who fought for our country, and you're like just gonna throw to the side. So that usually bugs me. But yes, a mandatory clause got to be the actual purchase price, and if the purchase price changes, that needs to be adjusted as well. Number 12, FHA mortgage insurance premium. That changes the VA. Okay. It is 1.75%.
your loan amount.
Yep. So number 12, I mean, that first line is 1.75%. Right? Yeah.
Yeah.
Of the,
Yeah,
of
yeah.
the base of the loan
The
amount.
base loan amount. And check B, added to the loan amount and financed. Never have I ever had a client pay for their mortgage insurance premium at closing
Right, so that's
Ever.
consistent, y'all.
for FHA.
1.75 and check B,
Yes,
box for B.
forever and ever and
If
ever.
they were gonna pay cash, I would look at a conventional again.
Yeah, like, would make sense. 14, tax service fee. These costs are or are not included in the closing costs that seller has agreed to pay. So on the first page of your offer where it says seller pay closing costs or seller contribution,
Yeah.
seller
Right.
contribution, is this tax service fee included or not included in that number? I always like to say that it is included, so I do that first checkbox.
How
Eight.
much are the tax service fees?
$85 typically is what I see. 85 to 95.
And is that broken out as a separate line item on the settlement
Yes.
statement?
Yeah, it is.
Okay.
They're the same.
All right, number 15. Repairs required in FHA. So that's basically the same thing on the conventional side as the lender required repairs. I typically do the same boxes or the same things. I'll do seller and 500 is what I see most frequently. Questions? Resounding silence is a myth.
Well, we got more.
All right, next box, third page, number 18. May be obligated to connect to a public sewer. So FHA likes to have their properties connected to public sewer and public water. If it's not, this is where this box comes in, this paragraph comes into play. I usually put in that first box, seller agrees to pay the cost of said connection to not exceed $500.
If they're on septic,
Right.
Yeah.
So
you
if the
could
property is
connect to
on
a sewer
septic,
for $500 if you're on septic.
Not to exceed 500.
Okay,
So if it exceeds 500, then, which of course it would.
of course it would. Yeah,
It'd be like 6,000.
Yeah. Yeah.
if not more.
So that's not to say that like, if the property is on septic, you're still
Just
fine.
have to
It's still
have-
fine. You're still fine.
And you're saying that FHA.
You're saying
was-
FHA would probably still approve it?
Yeah.
Oh, okay.
How much does it cost to get connected to sewer? $500. Which is why you're safe.
I think I paid
Because you got the right number there.
years ago. I think I got robbed.
Okay. Number 20. An arm's length transaction. Basically, are the buyer and seller related? Which 9 times out of 10 is a no, which would be
The first box.
the first box. Is 22 new?
Must be. Which of course is changing even more, potentially.
Condominiums have to be FHA approved and VA approved. If it is a townhome, I don't know if Randy remember that, but if it's a
No,
town,
and I have a handout for that.
if it is, the only way to know, don't look at MLS and don't look at what it says on Zillow or Redfin or whatever. The only way to know for sure if it is a townhome or a condo is the legal description. If it has the word condominium in it, it is a condo.
And I bet Danny would send you one
And
over
there,
quickly.
Yep. And there are townhouses that look like condos, and there are condos that look like townhouses. Make sense? It shouldn't. It can't.
Yeah, so you can't, it's not by sight. In the legal description, it'll say something like, the address,
It'll
a
sound like
condominium, blah, blah, blah. If you see the word condominium in the real legal description, it's a condo, no matter what it looks like. No matter, don't argue.
Doesn't matter.
That's the final word.
Your next question should be, how do I know if it's FHA approved? Go to Google and type in FHA approved condos. It is the very first thing. It is a FHA ran site. You can search by state, by zip code, by city. I will give you a word of warning. There is a there is a drop down box that says status, and it could be status of rejected, expired, or approved. You want to make sure you're looking at approved ones.
So what if they're not? You can't get an FHA loan.
Right.
So what if your buyer only?
What if they're FHA and they want a condo?
Yeah, I mean, I would think you would come to that a lot because
It happens.
of what an FHA loan stands.
Because it limits what an FHA buyer can qualify for, because FHA won't lend in these condominiums. Only these.
So then you're just.
Well, they're talking about loosening some of the restrictions, that's coming out shortly.
Right.
But it is better to check before your buyer falls in love with the property that the lender can't lend.
Yeah, if I say they're pre-qualified to use FHA financing up to $200,000. Condos, you can never afford as much condo as you can a single family home because of all those dues, HOA dues. We've got to take that into account as part of their monthly expense. Okay? This is a good rule of thumb. For every $50 in monthly HOA affects purchasing power by $10,000.
Really?
Generally speaking. So if I say they're good to go up to 200,000, and you're like, oh, let's go look at these condos with their $200,000 condos, but the dues are $200 a month.
That's cheap.
Well, okay, so if it's $200 a month,
Right,
that's
so then you
40
knock it
grand.
down to 160 from
Now you're
200.
looking at a 160 condo with $200 a month.
It's a little tough on them sometimes.
Yeah. It's a good rule of thumb though. Every $50 a month in HOA, $10,000 in purchasing power.
Some of those HOAs are expensive.
Oh, I've seen like $700, $800.
$700-800 a month.
So do
Yeah,
you have a
and
butler?
$600, $400.
Oh yeah, and like downtown stuff.
Wow.
It depends on what they include.
I mean, I'm sure you're getting a gym, trash service, a pool. I mean, I'm sure you're getting
They better have
Basically.
the works.
foot massages.
Yeah.
You know, I'm sure you're getting a lot of stuff.
Well, all utilities, I mean, it just depends.
Yeah.
And is your insurance lower generally with the?
Yes.
Homeowners insurance?
Yeah.
Generally lower. Yeah.
Yeah,
For townhomes and
so you're just
condos.
paying your interior.
Walls in.
Walls in.
Everything walls in, yeah.
Yep. All right, we're good on conventional and FHA. I'm going to scoot to the VA. Again, first page is the same. Second page, you'll notice again there is no appraisal contingency. Runs to the day of closing.
Why don't we say appraisal contingency deadline or limit? I mean, because there's still that contingency, because.
It runs to the day of closing.
Right.
Number 12. B. I feel like multiple choice test.
I'm just about to say.
B. I've never had a veteran pay their funding fee at closing. So basically the VA charges a funding fee, and it can vary depending on if it's the veteran's first time, second use, what branch of the military they were in, and some of them can even be waived completely. So that's why I don't put a percentage there. All right, so 12B. 13 is that same, they just keep calling it a different thing, but it is the lender required repairs. Typically I see that $500 in there too. Last page. 16. Public water and sewer connection. It's the same thing as FHA. And I see 500 in that box as well. Signatures.
Yeah, you feel comfortable speaking to that?
This is y'all's first time seeing this all cash exhibit? Mine too.
Okay.
I don't get all cash.
Yeah, like why?
Why would I ever see this?
All right. Here we go. So, number 1 on the all cash.
Sorry. I've never seen it before.
There are plenty of times people say, oh, cash, they want to present themselves as a cash buyer because you look stronger. But in the 30 days before closing, you might decide, hey, I can get a great interest rate, so I'm going to do that. So in number 1, you can just basically protect your buyer's right to start out cash, but then decide to get a mortgage. So it's, I never see B checked. I usually see one of the 2 A boxes. But you have to talk to your client about this. And I would try to avoid the B box. And number 2, if you present yourself as an all cash buyer, you've got to show the listing agent, the seller, proof of funds, which means a redacted bank statement, investment account statement that shows that that money is in there. So typically people will put 3 or 5 days of binding agreement. I would not go longer than that, or they're gonna be suspicious. This is another thing to tell your client.
It's in
We're-
yen coming from China. Just relax.
We're-
Checks in the mail, okay?
We're gonna have to produce proof of funds with a redacted statement, so that you go out, you get excited, you're gonna buy a house, and then some buyers are less prepared to access their accounts, and they're not electronic bankers, so to speak.
I have a question.
Yes,
So when you asking for a statement, is it supposed to be like you're supposed to see that date, like today's date on it?
Oh, no. Just your most recent monthly statement, and usually you can access those online.
Okay.
You can black out like the account number.
Yeah, that's what you would do, is you get your client to download it, take a Sharpie to mark out the account
A
number.
lot of people get a letter from their banker.
That's true too.
Blacking out the account number works for cash deals, not for finance deals.
Right.
We gotta have the account number.
Right. And so the date is not, you just want it to be pretty current. You don't want it to be 6 months ago,
I had that.
or they won't believe it.
Or you said, or a letter from the bank.
Mm-hmm. Yeah, because rather than providing a copy of the statement, they can, basically certify this person has more than X. Okay, and then down number 5, the appraisal contingency. Maybe this wouldn't apply to an investor, but when it's a regular owner-occupant, I advise that it shall be subject to an appraisal. Now, your client's going to have to pay for that appraisal and order it, but so it is their choice. But I would say encourage it, and then if they just are adamant, no, I don't want an appraisal, I don't want to know if I'm making a good choice. And then on number 5B, I would always check buyer to select the appraiser. Okay, and next page. Well, the number of days that you would fill in this blank, similar to the, roughly 21 days, you have to think through strategically, okay, you have to order, if you're gonna have the appraisal, you're gonna have to order it, and you should give yourself, would you say 7 business days turnaround time?
I mean,
Well, anyway, you call an appraiser and you need to find out from them.
Are you guys slammed today? I mean, if it's the middle of summer, I would say 17 days.
Are you hearing this? So it really
summer,
depends on
because-
the time of
Because that means
the
you
year.
gotta contact the appraiser, you gotta get something scheduled, they gotta arrange it with the seller, they gotta do the report, they gotta get. If it's the middle of summer, I'd say somewhere between 14 and 17 days. If it's the dead of winter and everyone's just sitting around doing nothing, you probably get it back in 5.
Right. So you do not commit a number without calling, which makes it hard on the weekends, so you just gotta think about that. You might even, if you know you've got a cash buyer, you might make some phone calls before the weekend to go ahead and line up an appraiser just to know what their turnaround would be.
How do I find an appraiser?
There's certainly home loans.
Well, we can make recommendations.
Okay?
Oh, just because
Can,
we're doing
can,
cash.
can I make a blanket one?
Absolutely.
Because they're a vendor, they're a vendor here? Can they teach a class?
What, DS Murphy? Yes, I don't wanna say 100%.
Okay.
They would
Just
be
one
on
is-
my list of 3.
It is one that I recommend, is DS Murphy.
DS Marketing?
DS Murphy.
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 We're bringing another one on soon. Yep.
I have a name, Glenn Griffin.
Right. No, why don't we put together?
No, let's do that.
Let's
He's awesome.
come up with appraisers we know and love. So my advice would be to check that out before you're filling out the form, even before you found the property. How many days do we need? So those are our forms. You're not going to remember all this, but we wanted you to at least have seen it. And seriously, I want you to read these words with the and you can kind of look at the 3 financing ones, do them side by side because they're real similar. They're just a few differences, so you don't have to read every word of every one of them.
Yeah, a lot of them they say the same thing, just written 3 different ways.
Yeah. All right.
Any last minute questions for me?
Do you know of any programs that help with down payment, like the
Yes.
city of Atlanta has Uplift or something?
Yes, they
Invest
do,
Atlanta.
Invest.
and even in FMLS, when you're looking at properties, there's a column when
Down
down payment assistance is marked. So
Yeah, a lot of those programs are like city or county
Uh-huh,
specific.
okay.
correct.
We're,
In Georgia Dream.
yeah.
Yes.
We have all of them.
Okay.
And we do other classes, like we do a 101, we'll do a 102, which is for like more advanced problem solving. We'll do one where we talk about renovation loans for an hour. So we do quite a bit.
The other one with all the
Teaching.
specialty, oh, that's in the 102, the specialty.
We do an investor, how to work with investors, because we've got some pretty nifty products for investors. So yeah.
So I have a question. Let's say that we do have a buyer that's pre-approved through you guys,
Uh-huh.
and they have all their letter approval things, right? And go out and show a house on Saturday. They love the house. They want the house. It's fit within the criteria. If for some reason when we submit the offer, the other agent needs to contact you, what are your hours? Are you guys Monday through Friday 9 to 5, or are you ever available?
24/7.
If I'm awake and my phone rings,
Awesome.
I answer it.
Okay, cool. Thank you.
And this is a big difference between.
But I sleep
a
all day
big-
Saturday, all day Sunday.
Not with a 5-year-old, you do.
She's 3.
3. Definitely don't.
No, if I don't answer, then you're gonna get called back.
Okay.
100%.
Sounds great.
Yeah, we work a lot of weekends.
The big horror stories that I hear from agents out there, this flipping loan officer will not call me back.
Yeah.
I want to know what the hell's going on, because it's your paycheck.
Oh, yeah.
And we answer the phone, and if there's a problem, you're gonna know. If there's a problem that we can fix, you're not gonna know. You got enough stuff to worry about. So,
Yeah, I
we
mean,
answer the phone.
when do most people want to go look at houses?
Saturday.
Weekends.
Sundays.
Evenings,
Yeah.
Saturday and Sundays. And we're available. I didn't bring any cards. They're in the house. And I know we went through this kind of fast, and I'm not sure what Randy covered and if there were any gaps, but grab one of our cards. We'll treat you to a coffee, chat more, learn more about you guys. Our main goal here is to make you all successful.
And,
Make y'all-
on, when we have our final day, which is Thursday next week, after you all pass your final exam, Certainty will treat you to a little early afternoon happy hour at 10 Lizzie's, across from
Very nice.
Gertrude Center Place. So they really are our friends. So,
Friends forever.
yes, yeah.
Anybody's gonna buy you a drink.
Definitely.
And snacks.
And snacks.
All right, let's take, a 10-minute break.
And thank you guys.
Thank you.
Thank
Great
you.
job.